This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. And thank you to Mercaris.
Hello, everyone. This is Ryan Koory, the Director of Economics with Mercaris, here for your August monthly update to the U.S. Organic Outlook. To start off, what we've been working on here at Mercaris is we're putting together our preliminary estimates of what production might look like here in the U.S. With that, we put together our preliminary yield estimates. From our yield estimates, they are in part based on data that we take from the USDA. Early in August, the USDA put out its first yield estimates that are based on real survey data. And these August estimates the USDA puts out are generally seen as the first real indicator of where U.S. yields and potentially harvests are going to head. But it's always worth reminding yourself to take this stuff with a grain of salt, as we're still pretty squarely in August and a lot can happen between now and December as crops come out of the field. And to kind of give you a little context of what that means, if we look at where the USDA was looking last year at organic corn yield, or conventional corn yields rather, in August, they were estimating somewhere bushels around 181.8 bushels per acre, when their final estimate came in at 174.6. So there's a lot of room for these to change before the end of the harvest. Also, we're kind of stuck in a position where we have to make a bit of an informed guess about our organic yields based on USDA data because there aren't good yield surveys for the organic industry. But if we look at where organic yield data that we do have historically and how it correlates with conventional yields on a state level basis, there's definitely a lot of correlation in terms of both direction of change and magnitude for those two different things. So by looking at what the USDA is currently estimating for conventional yields, we can get a pretty good notion of where we think organic yields are going to head. And now with all of those caveats out of the way, to give you kind of an idea of what we're looking at for yields as we get ready to move into harvest. On a national average, currently we're looking at organic corn yields to be up slightly from last year. We're currently estimating organic corn yields will come in somewhere between the 124 to 125 bushel per acre range on a national average, which will put them up about 3.5% from last year. This year-over-year gain might seem a little bit surprising at first glance, especially given the challenging growing conditions seen in Minnesota and Wisconsin and even into Michigan over the first part of the summer. But for the most part, a lot of the corn belt outside of that area has actually seen really favorable growing conditions this year. And all the way up into the Northeast, where organic corn production has a much larger proportional footprint compared to the conventional sector. So really what we're looking at within the organic corn market is, in general, the better growing conditions in these other areas where we do have a fair amount of organic corn is offsetting these losses we're seeing up into the northern portion of the Corn Belt, the northwest portion of the Corn Belt. And overall, we're looking at yields to be slightly higher on a national average basis. Talking about organic soybeans, nationally, we're expecting yields to come in somewhere around the 36 to 37 bushel per acre range, which will put them up about 2% year over year. What's kind of interesting with organic soybean yields is we're actually see them moving in an opposite direction of the conventional yields nationally. And the reason we're looking at this is, again, it's this geographic issue. While we do have a large number of acres in Minnesota and Wisconsin of organic soybeans, and even a few into the Dakotas where growing conditions have been the worst this year, on average, yields are protected by the number of acres we have towards the east side of the Corn Belt and into the northeastern portion of the U.S., where growing conditions, again, have been relatively positive. So for both organic corn and organic soybeans, based on the yield estimate data we have at the start of August, it looks like we have room for both of those to trend a little bit higher this year. And finally, taking a quick look at what we see going on with organic wheat yields. Organic winter wheat is by and large harvested at this point, with the exception of just a few places. And on a national average, we are estimating organic winter wheat yields are going to be down about 1% year over year, down around 33 bushels per acre. And a lot of this is due to some of those drier factors that we've discussed in some of these other areas, kind of being offset by better growing conditions in other areas. When you think about the U.S. organic winter wheat crop, a lot of it's produced throughout the Corn Belt. We don't make quite as much of it out into the Pacific Northwest as we do some of our other wheat grades, or as maybe might be made within the conventional sector. But if we look at organic spring wheat yields, spring wheat yields are looking pretty rough this year, and we're estimating them to be down by about a third relative to last year, somewhere down around that 18 to 20 bushel per acre range. And really what we're talking about here is this impact of the drought that we've seen across the High Plains region and the Pacific Northwest. And it really looks like it's going to eat into our spring wheat yields this year.
So Ryan, I know normally I'd be asking about the impact of pricing based on these yield estimates, but I know the other big factor before we get to the pricing conversation is how is trade or imports impacting what we might see come in for domestic use. And do you have any indication of how that's looking at this point in time?
Yeah, over July, trade was actually pretty interesting. If we look at organic whole and cracked corn imports, July was pretty exciting as we saw imports move higher year over year, and not just higher, but higher by a lot. They were up about 60% year over year in July. And what makes July's organic corn imports so interesting is a large portion of those imports were from Argentina. We saw organic corn imports from Argentina reach about 18,000 metric tons over July, which is both the first shipments we've seen from Argentina since March of this year. And also the third quarter is seasonally when we start to see imports from Argentina pick up. So it's interesting that they're both higher after we've kind of seen this trend of lower imports from Argentina, and they're higher coinciding with the fact that we're hitting the period where we do start to see an influx in imports from the country. So, it leads to the question of, with July's data, are we seeing an end to these tighter imports from Argentina that we've seen over the past year, or is July kind of a flash in the pan? And when we turn to look at soybeans, again, the import picture, we're talking about Argentina. July saw another large quantity of soybeans arrive from Argentina, making July the second month in a row in which imports from the country were both higher year over year and substantial. And again, we go back to this question about imports from Argentina. As we've talked about over the past year, the imports from Argentina, or the lack thereof, really since the start of the 2021 marketing year, have been a key part of the tight organic soybean supply situation in the U.S. and really a piece of what has kept organic soybean prices at their astounding level. So with organic soybean imports from Argentina in both June and July higher year over year, and July organic corn imports higher from Argentina, are we seeing the first signs of a return of large imports from Argentina right ahead of harvest? Or are we just talking about a couple months that are unusual and we're going to go back to this reduced pace that we've seen over the past year? And it's a real point of market risk and speculation right now, because honestly, we just don't really know. And then quickly kind of touching base on what's going on with organic soybean meal. Organic soybean meal imports this year in general have been pretty exciting considering the pace that we've seen. But with July, what we saw was the first month that we've seen really since August of last year where U.S. organic soybean meal imports dropped year over year. As we take a look at what we've got going on there, the decline really appears to be from India. And this marks the second consecutive month where we've seen Indian organic soybean meal imports fall year over year. And they were down pretty substantially. They were down 60% year over year in July. So whenever we think about what's going on with July, and what's going on with these organic soybean meal imports from India, especially with all the speculation we've had, it's curious to note, are we talking about the first signs of the supply slowing down as we've kind of been speculating all year, or is this just, again, a return to normal behavior? Maybe kind of pumping the brakes a little bit around speculating around India to kind of give it a little bit of context. So looking at June and July, imports were lower year over year, yes, but so far this marketing year, the U.S. has imported more than 321,000 metric tons of organic soybean meal from India, which is 22% higher than what we imported over the 1920 marketing year. So if we look at the fact that June and July are a little bit lower, maybe that's just a sign that we're starting to exhaust the exportable supply of soybean meal in India for the moment. And then the second thing to kind of think about when we think about the slowdown in Indian organic soybean meal imports is, if we look at where we were basically over the past year, if we remember back to this point last year, we've seen heightened imports really since the beginning of the 1920 marketing year. And a lot of those heightened imports were ahead of the NOP's announcement in January that they were ending their recognition agreement with India's ADEPA or APEDA. So those imports during the first half of this marketing year, and even a little bit past that, in hindsight, they look like they might have been stockpiling ahead of that announcement that put a little bit of risk around access to those supplies. So if we think about the fact that we've had such historically high imports over the past year, and the fact that we had the stockpiling activity, maybe what we're seeing in June and July is more return to normal import behavior. They're lower compared to where we were last year, but in a historical context, I think we imported somewhere around 12,500 metric tons of soybean meal from India in July. They're a little bit more in line with what we were doing historically. So maybe what we're seeing in June and July isn't really a slowdown as much as it is a return to more normal import behavior from India. But on the other hand, there has been a lot said about Indian organic soybean meal imports. And with the USDA's announcement in January, it starts to really have teeth beginning in July. And with some of these other actions we've seen, particularly with the potential threat of anti-dumping duties and countervailing duties against India, maybe these are the first signs that we're going to see substantially reduced imports from India as we move over this next marketing year. And again, kind of like what we said with soybeans, it's so hard to say exactly what the motivating factors are behind these, but they're pretty big risk factors if we think about organic soybeans, because so much of that market is based on imports.
Well, I'm sure it's no surprise to anybody that when we are talking organic grain, the big story has been that soybean and soybean meal market and the availability. It's something we've talked about on every one of these podcasts, and it doesn't change, but it has changed at the same time. And I think everybody's kind of waiting with bated breath on what's going to happen around this India stuff. But as you mentioned, people listening might be wondering, why the heck are we talking about Argentinian imports when India is the main storyline here? And I'm talking for people that maybe haven't listened for a while, because Ryan has talked about this Argentinian issue. Ryan, how can that impact, and can you give us a little bit of context of the volume of Indian soybean meal and bean imports, and really where that stands in our overall organic bean import profile, or whatever you want to call it, portfolio?
Absolutely. When you think about U.S. organic soybean supplies, it is useful to kind of break the market into two pieces, the soybeans and the soybean meal. And whenever you look at the soybean situation, we import just about as much as we produce domestically. Over the current marketing year, we're on pace to import somewhere around 240 thousand metric tons of soybeans. And that's down pretty substantially from last year. Last year, we hit almost 300,000 metric tons of soybeans. And so, with almost half of our supply of soybeans being in the form of imports, if you lose 60,000 metric tons of those soybean imports, which is a pretty substantial hit, that substantially tightens the market for soybeans in the United States. We're not talking about soybean meal, but soybeans. And so if you're purchasing soybeans domestically for crush or what have you, that's really the market you're dealing with. What do I have to pay to secure soybeans? And it's the tightening of that market, again, largely due to the fact that we've seen a substantial reduction in bean imports that's tightened up that market and really pushed on prices. And kind of wrapping it back around to why are we talking about Argentina instead of India when India is such a big deal? India is a big deal, but India is more of a big deal whenever we're talking about soybean meal. They supply somewhere around 85 to 90% of our soybean meal. They're less of a factor whenever we talk about soybeans. To kind of maybe put it in context, if we look at India right now, we're on pace to import somewhere around 26,000 metric tons of soybeans from India this year. And to kind of go back and talk about what we were mentioning with Argentina, over the month of July alone, we imported 18,000 metric tons from Argentina. Last year we imported about 104,000 metric tons of soybeans from Argentina. Argentina is a much bigger factor in the U.S. organic soybean import picture than India. And part of the reason that India isn't as big of a factor in terms of soybean exports to the US is that most of the soybeans get crushed into soybean meal and shipped to the United States. And that's where India really becomes a big factor. Again, India exports, about or provides about 80 to 90% of our soybean meal imports or organic soybean meal imports. And if you look at those organic soybean meal imports, and I don't remember the exact ratio off the top of my head, but I believe it's about half of our domestic supply. If you take soybeans and soybean meal, kind of equate them and put them into a big pot, about half of that pot is soybean meal. And so India, in terms of the U.S. total supply picture of soybean meal, is a huge factor because they are such a big contributor of soybean meal. And that's where this gets interesting. If we look at those volumes of soybean meal that we've imported this year, particularly from India, we've imported a substantial amount of soybean meal. It's really those soybean imports that have been off this year that have tightened up the domestic soybean market that's really pushing up on prices.
And that's also in another previous episode, we had talked about that tightening up being the Argentinian beans not coming in that are being crushed to be sold for bean meal here in the US. And that's where the shortage is coming up from, because if I remember correctly, Indian soybean meal imports are up substantially, correct?
Yeah, absolutely. As we talked about just a little bit ago, through July of this year, we've imported somewhere around 321,000 metric tons of soybean meal from India, which is up about 22% from what we imported over 1920. So we've imported a substantial amount of beans or soybean meal rather, from India. But if we talk about that cut in imports from Argentina, if we look at 1920, we imported, like I said, about 104,000 metric tons of organic soybeans from Argentina. This year, we're on pace to import somewhere around 70,000. So there's 30,000 metric ton reduction in U.S. supply from a decline in imports from Argentina alone. And Argentina has been now for a little bit our largest supplier of organic soybeans from foreign markets anyways. And so whenever we see this rear up that we were talking about of imports from Argentina over June and July, it's really interesting in terms of what this might mean for U.S. supply and prices. Are we going to see a return of large quantities of soybeans from Argentina coming into the U.S. market, adding to U.S. organic soybean supplies? And is that going to help back prices off from these just phenomenal levels we've really seen this year? Or is this a flash in the pan? Are we going to talk about things returning back to the way they were this year, and we're going to see soybean imports from Argentina remain pretty reduced. And that's where Argentina imports kind of push the soybean market, and then Indian imports are really pushing the soybean meal market. And it's really the movement of those two different things in their own ways that kind of create the overall U.S. organic soy market.
And again, just to go into context, before we get into the pricing, am I correct in saying that about 20% of our domestic organic soybean needs are grown domestically? Is that correct?
Yeah, that's a pretty fair assessment. We import a vast percentage of our soybean needs into the United States. The domestic market definitely helps add to supplies, and there's definitely some impacts from that. But in terms of really creating the price and the supply picture within the United States, the vast percentage of organic soy within the United States is driven by foreign markets. So wrapping up with a quick overview of what we're looking at in terms of prices. At the start of August, really we're kind of looking at a market that appears to be coasting just a little bit. Over the 2-week period ending August 7th, the Mercaris market price survey captured organic feed grade corn delivered to Corn Belt elevators at about $8.88 per bushel, which is down about 60 cents per bushel from the start of last month. Similarly, if we look at feed grade organic corn, organic soybeans rather, feed grade organic soybeans delivered to U.S. Corn Belt elevators came in at about $28 per bushel, the 2-week period ending August 7th, which is down about $2.50 from the start of July. The one little caveat I'd like to give around the soybeans is with these heightened price levels that we've seen, we've also seen a lot of volatility in terms of contracting. I've seen contracts come in at $25 and $35 within the same week. So even though $28 per bushel is down over that 2-week period, there's not much of a safety net to say that that's a trend or that we won't be back up above $30 in another couple of weeks, just depending on how contracting goes. It's been a very volatile market to be working in right now.
The indicator I'm getting from those prices are that there is either a calm before the storm of harvest, or it's a let's let the dust settle here before harvest and see what happens, especially in the soybean market with the beans, as we've talked about. So I think with that, I really appreciate your time and the information today, Ryan, and we'll be back next month with further updates and as we get closer to harvest. Thanks a lot, Ryan.
Yeah, thanks, Brian.